Nearly 6 out of 10 Florida retirees say their monthly costs have jumped in the last 2 years, but here's the terrifying part. Most don't realize the biggest hits haven't even arrived yet. New Florida laws are quietly lining up changes that can raise your condo fees, spike your insurance bills, and even put your home at risk, all before 2026. Many of these rules were passed without much noise, buried in legal language most people never read, and they only start hurting when it's already too late to prepare. Here's the uncomfortable question no one is asking out loud. What if the place you worked your whole life to retire and suddenly becomes unaffordable, not because of inflation but because of the law? Imagine opening a letter from your condo board demanding thousands of dollars, or finding out your insurance changed overnight, or learning you missed a deadline that erased your legal rights. These aren't scare stories, they're real situations Florida retirees are already facing. In this video, I'm breaking down 10 shocking Florida laws that could destroy retirement plans by 2026, step by step in plain English. And stay until the end, because law number 7 is the one that blindsides the most people and triggers the biggest financial shock. If you live in Florida or plan to retire here, this is information you cannot afford to ignore. Number 10, the squatter removal law. For many Florida retirees, the idea of someone moving into their property without permission sounds impossible, until it happens. Florida has strengthened its squatter removal law, allowing law enforcement to remove unauthorized occupants much faster without a long court battle, as long as the rightful owner can prove the property is theirs. On the surface, this sounds like good news. But here's the problem. If you're a senior who travels, lives part-time out of state, or owns a seasonal home, this law can still turn into a stressful legal nightmare if you're not prepared. One missing document, one unclear utility bill, or one delayed response can slow everything down when every hour matters. This law becomes especially dangerous for retirees who leave their homes empty for weeks or months. Squatters often know how to exploit confusion, claiming verbal permission or fake rental agreements. While the law favors property owners, police can only act quickly if you show clear proof of ownership and occupancy. Without it, you could be forced into civil court anyway, losing time, money, and peace of mind. Seniors are targeted because they're less likely to check their property frequently and more likely to assume, "This could never happen to me." The smartest move is prevention and preparation. Keep copies of your deed, property tax bill, government ID, and utility statements together, both physical and digital. If you travel, ask a trusted neighbor to check your home weekly, use visible security cameras, and never leave utilities fully disconnected. A small preparation step today can stop a financial and emotional disaster tomorrow. Because under this law, the question isn't whether squatters exist, it's whether you'll be ready when the law is tested on your home. Number 9. Florida's telephone solicitation law, the scam trap most seniors miss. Florida has tightened its telephone solicitation and robocall laws, and while they're meant to protect residents, retirees can still get burned badly if they don't understand how scams now operate around these rules. Here's the shocking truth. Many scams today technically follow the law, just enough to slip through the cracks. Calls that look official, texts that sound helpful, and voicemails that claim to be about Medicare insurance updates or refunds are still flooding seniors' phones every single day. And once you engage, even briefly, you may be added to multiple scam lists within hours. What makes this especially dangerous for retirees is how fast one small mistake can snowball. Answering yes to a recorded question, clicking a stop link in a fake text, or confirming your zip code can signal that your number is active and valuable. From there, calls increase, pressure tactics escalate, and some scams move from phone calls to fake paperwork, fake bills, and even in-person visits. Seniors living alone or on fixed incomes are often targeted with fear-based messages like, "Your benefits are expiring," or "This is your final notice," pushing them to act before they have time to think. The safest approach is zero engagement. Never confirm information with unknown callers, even if they sound professional or claim to be on a recorded line. Let legitimate companies leave written notices instead. Use call blocking tools, silence unknown numbers, and tell family members never to handle something for you over the phone without checking first. Under Florida's rules, your consent matters, and scammers are experts at tricking people into giving it away. Protecting your phone isn't just about convenience, it's about protecting your identity, finances, and peace of mind. Number 8. The free property recording alert most retirees don't even know exists. Here's something that shocks almost everyone. In Florida, someone can file certain legal documents connected to your property, and you might not find out until serious damage is already done. That's why Florida clerks offer a free recording notification service, a tool designed to alert you if any document is officially recorded using your name or property information. The problem? Most retirees have never signed up for it, and criminals know this. Property and deed fraud often targets seniors because scammers assume paperwork won't be checked regularly, especially if the homeowner is retired, traveling, or living part-time out of state. This becomes dangerous when bad actors record fake deeds, liens, or legal claims against a property. Even if the document is fraudulent, cleaning it up can take months, legal help, and thousands of dollars. Retirees often find out only when they try to sell, refinance, or receive a notice in the mail demanding action. By that point, the emotional stress is already high, and the financial damage may already be in motion. What makes this worse is that these filings can look official, causing panic and rushed decisions, exactly what scammers want. The good news is this is one of the easiest protections you can activate today. The recording notification service is free, takes only a few minutes to set up through your county clerk, and sends alerts when documents are filed with your name. You should register every version of your name, with and without middle initials, and include email and phone alerts if available. Think of it like a smoke alarm for your home's legal identity. It won't stop fraud from being attempted, but it can give you early warning, and in legal situations, early action can mean the difference between a minor inconvenience and a financial nightmare. Before you go, pause for 1 second and ask yourself this: which of these laws could change your life the fastest? Drop that number in the comments, not just for us but to warn someone else who might not know yet. If this video opened your eyes, make sure to watch our previous video linked on screen. It connects directly to what you learned today. We put hours of research and real effort into breaking this down simply, so if this helped you, support us by subscribing. It's just one click, but it helps us more than you know. Number 7. The Condo Reserve Bomb. Mandatory funding hits in 2026. This is the law that shocks the most retirees, because it doesn't feel dangerous until the bill arrives. Florida now requires condo associations to complete structural integrity reserve studies, and starting in 2026, many buildings can no longer delay or waive funding for critical reserves. That means associations must start collecting real money for roofs, foundations, concrete, and major structural repairs. The state agency overseeing this, the Florida Department of Business and Professional Regulation, has made it clear: ignoring structural risks is no longer allowed. For retirees living on fixed incomes, this single rule can turn a cheap condo into a financial trap almost overnight. Here's where things get painful. Once reserve funding becomes mandatory, boards often have only two choices: sharply raise monthly fees or issue special assessments that can run into the thousands, sometimes tens of thousands, of dollars per unit. Many retirees are blindsided because they bought into condos years ago when fees were artificially low. Suddenly they're asked to pay for decades of deferred maintenance they never planned for. Worse, when buyers see high reserves and upcoming repairs, condo values can drop, making it harder to sell or escape. The smartest move right now is information, not panic. Ask your condo board for the Structural Integrity Reserve Study Summary, the reserve funding schedule, and any planned assessments. If you're thinking of buying, never skip reviewing these documents, even if the unit looks perfect. And if you already live in a condo, start building a reserve buffer in your savings, even if it's small. This law doesn't just change numbers on paper, it changes who can afford to stay. For many Florida retirees, this isn't just a housing issue, it's a retirement survival issue. Number 6. Mandatory condo websites. Transparency that can destroy property values. Starting in 2026, many Florida condo associations will be required to maintain an official website or secure online portal where key documents must be posted for owners and buyers to see. This rule comes from legislation passed by the Florida legislature, and while it sounds harmless, even helpful, it creates a new kind of risk for retirees. Why? Because once everything is online, nothing stays hidden anymore. Budgets, inspection reports, reserve studies, lawsuits, repair plans, all of it becomes easy to access with just a few clicks. For retirees, this level of transparency can turn into a double-edged sword. If your building has weak reserves, upcoming special assessments, structural issues, or legal disputes, buyers will see it immediately. That can reduce demand, push prices down, and make units harder to sell, especially for seniors who may need to move quickly for health or financial reasons. Even owners who have paid on time for years can feel trapped when bad management decisions from the past are suddenly exposed to the world. The key here is preparation, not fear. If you already own a condo, start paying attention to what your association is posting, and what it isn't. Read meeting minutes, budget notes, and reserve updates like your financial future depends on it, because it does. If you're planning to buy, treat the condo website like a warning dashboard, not a formality. Look for patterns, delayed repairs, vague language, or repeated future discussions. In 2026 and beyond, transparency won't just protect buyers, it will separate safe buildings from risky ones, and retirees who ignore this law may find out too late that the internet remembers everything. Number 5. Milestone inspections, when age of a building becomes a financial trigger. In Florida, a building's age can now quietly determine a retiree's financial future. Under updated safety laws passed after major structural failures, condo buildings must undergo milestone inspections once they reach certain age thresholds, and the results can trigger mandatory repairs and funding requirements. These inspections aren't optional opinions, they're formal evaluations that must be reported and acted on. Many retirees don't realize that even a well-maintained building can suddenly face expensive repair orders once it crosses that age line. Here's where the danger lies. If an inspection finds structural concerns, even moderate ones, associations may be forced to move fast. That often means special assessments, emergency loans, or sharp increases in monthly fees. Retirees living on fixed incomes rarely have time to prepare for these sudden costs. Even worse, once inspection results become public, lenders and buyers may hesitate, making units harder to sell. A condo that felt stable for years can quickly become a financial pressure cooker because of one inspection report. The smartest thing retirees can do is get ahead of the clock. Ask your condo board exactly when your building hits its milestone age, when inspections are scheduled, and how repairs will be funded. Read summaries, not just announcements, and don't ignore technical language. It usually hides future expenses. If you're considering buying, avoid buildings nearing their milestone window unless reserves are already strong. These inspections are meant to save lives, but for unprepared retirees, they can also redefine affordability overnight. Number 4. Loss assessment insurance deadlines, the fine print that costs retirees thousands. Many Florida retirees believe that once they have homeowners or condo insurance, they're fully protected. But here's the harsh reality. Loss assessment coverage comes with strict deadlines, and missing just one of them can leave you paying massive bills out of pocket. When a condo association suffers damage from storms, fires, or structural issues, the board can legally pass the cost to owners through an assessment. Florida rules allow this, but your insurance will only help if you act fast and follow the timeline exactly. Most retirees don't learn this until it's too late. What makes this so dangerous is how quietly it happens. A board votes on an assessment, a notice goes out, and life continues as normal, until months later when owners receive bills for thousands of dollars. By then, many retirees have already missed the window to properly notify their insurer. Some policies require notice within a specific number of days from the assessment decision, not from when you receive the bill. That technical detail alone has cost Florida seniors their savings, simply because they didn't realize the clock had already started ticking. The best defense is awareness and speed. First, confirm whether your policy includes loss assessment coverage, and how much. Many retirees are shocked to learn it's far lower than expected. Second, the moment your association discusses or votes on an assessment, call your insurer immediately, even if the final amount isn't known yet. Keep copies of meeting notices, emails, and official letters. This law doesn't punish people for being irresponsible, it punishes them for being uninformed. And in retirement, one missed deadline shouldn't be the reason your financial security starts to unravel. Number 3. Citizens' depopulation rules, when your insurance changes without your consent. Many Florida retirees believe that if they're insured through Citizens, their coverage is stable and predictable. But here's the unsettling truth. Under Florida's depopulation rules, you can be forced out of Citizens and into a private insurance company if a qualifying offer is made, even if you never asked for it. Citizens, officially known as the Citizens Property Insurance Corporation, was designed as a last resort insurer, not a permanent safety net. And the state has made it clear, reducing Citizens' size is a priority, even if it creates confusion or higher costs for retirees. This becomes dangerous because these private replacement policies often come with higher premiums, stricter terms, or less predictable renewals. Many retirees open a letter, skim it, and assume it's informational, not realizing that silence can count as acceptance. In some cases, homeowners are moved automatically unless they actively opt out within a short window. For seniors on fixed incomes, this can mean hundreds or even thousands of dollars more per year, with very little time to adjust their budget or shop around. The most important step is attention and timing. If you're insured through Citizens, read every letter carefully and look specifically for words like offer, assumption, or depopulation. The moment you receive notice, compare costs, coverage limits, deductibles, and exclusions, not just the premium. If you want to stay with citizens, you must act before the deadline. This law doesn't wait for convenience, and it doesn't care if you're retired. In Florida, ignoring insurance mail is no longer harmless. It can quietly rewrite your finances without your permission. Number 2. Florida tort reform. Waiting too long can destroy your legal rights. Florida quietly changed some of the most important legal timelines that protect everyday people, and retirees are among the most at risk. Under major tort reform, the time you have to take legal action after an accident or injury has been significantly shortened. That means if you slip and fall, get into a car accident, or are harmed by negligence, the clock now runs out much faster than most seniors realize. These changes were passed through the Florida legislature, and they don't come with reminders or grace periods. Miss the deadline and your case may be dead forever, no matter how serious the injury is. This hits retirees especially hard because many people take a wait-and-see approach. You might think the pain will go away, or you don't want to deal with lawyers, or you're focused on recovery instead of paperwork. But under the new rules, waiting can be the most expensive mistake you make. Evidence disappears, witnesses forget details, and once the statute of limitations expires, courts won't even hear your case. For seniors on fixed incomes, losing the ability to recover medical costs or damages can mean draining savings that were meant to last a lifetime. The safest move is speed and documentation. If something happens, report it immediately, take photos, keep medical records, and write down what you remember while it's fresh. You don't have to sue someone right away, but you do need to know your deadline early. Even a short consultation can protect your options. This law doesn't judge whether your claim is fair or serious. It only asks one question: did you act in time? And for many Florida retirees, learning that answer too late has already changed their future. Number 1. Medicaid redetermination rules, the coverage cliff that catches retirees off guard. For many Florida retirees, Medicaid isn't just helpful, it's essential. It helps cover long-term care, assisted living services, home health aides, and medical costs that Medicare doesn't fully pay for. But here's the shocking truth. Thousands of seniors lose Medicaid every year not because they're no longer eligible, but because they miss paperwork deadlines. Florida now strictly enforces Medicaid redetermination rules, which means your coverage is constantly reviewed. If a letter goes unopened, a form is returned late, or a document is missing, your benefits can be cut off with little warning. This is especially dangerous for retirees because these notices often arrive during stressful times. Illness, hospital stays, or major life changes. Some letters look routine or confusing, filled with government language that's easy to ignore. But behind that paperwork is a hard rule: no response equals no coverage. Once Medicaid is terminated, reinstating it can take months, and during that gap, retirees may be forced to pay out of pocket for care that can cost thousands of dollars per month. For someone on a fixed income, that kind of disruption can be financially devastating. The most powerful protection here is organization and reminders. Make sure Medicaid always has your current mailing address, phone number, and email. Set calendar alerts every few months to check your status and paperwork. Keep copies, photos count, of everything you submit. And if a letter doesn't make sense, don't ignore it. Ask for help immediately from a caseworker or trusted family member. This law doesn't consider intentions or confusion, it only tracks deadlines. And for Florida retirees, missing one envelope can mean falling off a healthcare cliff with no safety net below. If there's one message to take away from this video, it's this: retirement in Florida is no longer set it and forget it. The laws we covered today don't arrive with flashing warning signs, and they don't care how long you've lived here or how carefully you planned. They show up as letters in the mail, fee increases, inspection notices, insurance changes, and missed deadlines. And by the time many retirees realize what's happening, the damage is already done. These laws don't target seniors on purpose, but they hit seniors the hardest because fixed incomes leave very little room for surprises. The good news is that knowledge is still power. Every law in this video has one thing in common: the people who suffer the most are the ones who didn't know what was coming. Asking the right questions, reading the fine print, setting reminders, and preparing even a small financial buffer can completely change the outcome. You don't need to panic, but you do need to pay attention. Florida rewards the informed and punishes the unprepared, and in today's legal landscape, being proactive is no longer optional. Now it's your turn. Which of these laws surprised you the most? Was it the condo reserve funding, the insurance changes, or the Medicaid deadlines? Drop a comment below. Your experience could help another retiree avoid a costly mistake. If this video helped you understand what's really coming before 2026, Show your support by liking the video and subscribing for more Florida retirement updates. And don't stop here. Watch our next video where we break down common Florida retirement mistakes that cost people their homes. Because in Florida, the smartest retirees aren't just those who saved, they're the ones who stayed informed.